name is John Denon, and today we're going to be discussing the concept of budgeting. Now, budgeting is a plan for the future in monetary terms, and there's a number of different types of budgets that companies employ. But regardless of the type of budget that they employ, the objective is to give them a standard or an expected performance that they anticipate they would like to achieve during the year. So a budget really becomes a measuring stick. And as we all are aware, if you can't measure something, you can't manage it. No matter what it is, in your personal life, your business life, your professional life, you have to be able to measure things in order to manage them. So today we're going to talk about two specific types of budgets. We're going to be talking about the cash budget, and we're going to be talking about the purchases budget. Now, the cash budget is critical because every company has a targeted level of cash that they feel they need in order to keep the company functioning. Now, once they have that target established, they need to take a look going forward throughout the year on what they expect to have at the end of each month or accounting period as far as a cash balance goes, to see if there's a shortfall or if they have an overage in cash. Now, this is absolutely critical, especially for someone working in the Treasury Department, because in the Treasury Department they are responsible for getting this cash in and out of the company. So, if there's going to be a shortfall in cash, you would want to have a budget that would give you an idea when that shortfall is going to occur. Because having that knowledge will allow the treasurer to be able to go out and ensure that he has the appropriate lines of credit available, so when the shortfall takes place, he can get the best terms possible when borrowing money for the company. The other side of the coin is when you have an overage. And that's just as important for the treasurer to know when you're going to have a surplus or overage in cash. Because in that situation, the treasurer would want to be able to invest that and get the maximum return for the company relating to that overage that they have. So let's put a couple of numbers together to see how it looks if we were to look at a cash budget for a company. And the cash budget would be laid out as you see up here on the board. You start off with your beginning cash balance. So if I was doing a cash budget for the month of April, so I'm doing it for the month of April. And if I knew that I was going to be starting April off with a beginning balance of cash of $10 million, that's my starting point for the month. Then the next step is, how much do I plan on collecting during the month? What will be my cash receipts from my customers? So once I calculate how much I'll be collecting, I add that to my beginning balance. So I take the beginning balance of $90 million, I'm going to collect beginning balance of $10 million. I'm going to collect another $90 million. So therefore, the total cash that I'll have available during that month is $100 million. Now, that's what I have available. But we all know we spend cash during the month also. We don't just collect it. So we're going to have cash disbursements. So we also have to estimate what our cash disbursements will be. So in this case, if we estimate that our cash disbursements during that month will be $80 million, we would subtract the $80 million from total cash available, telling us that we will end the month with a balance of $20 million. That allows the treasurer to know every month during the year in advance what you expect to have as far as a balance at the end of the month for cash. Therefore, he knows if he has to borrow or if he has to invest, and he'll be prepared for that situation. In addition, it's not just the treasurer, the operating people need to know what they have as far as cash on hand, so they can be prepared and can anticipate what they're going to be working with during the month. Now, second budget that we'll look at is a purchases budget, another very critical budget for the company. They need to know how much they're going to need to purchase during the month so that they will have enough goods on hand to keep their customers happy and keep their operation running smoothly. So, in a purchases budget, we actually take a backwards approach. Instead of starting off with a beginning balance, we're going to start off with the ending inventory that we expect to have at the end of the month. This is a critical number. The reason it's a critical number is the ending balance for one month automatically becomes the beginning balance for the next month. So, if this were to be a purchases budget for the month of June, we're doing our purchases budget for the month of June. I have to determine how much I need to have in ending inventory at the end of June. And that's critical because the ending inventory for June becomes July's beginning inventory. Why is that important? Because I better have enough goods on hand in the beginning of July to satisfy my customers' needs in the beginning of July. If I don't have adequate ending inventory in June, then I'm not going to meet my customers' needs in July, in the beginning of the month, because I don't have enough goods available to sell to them, and I'm going to have some very, very dissatisfied customers. So, first, I calculate what my ending inventory needs to be. So if I determine based on next month's forecasted sales that I need 10 million in my ending inventory, I'd say, okay, I need to end June with $10 million of inventory. So I need to have that on hand at the end of the month. But I'm going to sell goods during June also. So besides having an ending inventory, how much do I think I'm going to sell? Well, my cost of goods sold I'm anticipating will be 50 million. So if I need to end the month with 10 million and still sell 50, I've got to have $60 million worth of goods available during the month. If I have 60 million available during the month, does that mean I have to buy $60 million worth of goods because I need 60? No, I don't have to buy 60 million because I will have a beginning inventory that I'll start the month off of June with. Where do I get my beginning inventory from? Well, June's beginning inventory is May's ending inventory. And if I had that at the end of May, so that it's available to start June with, when did I buy it? I didn't buy it in June because I had it at the end of May. Therefore, if I had it at the end of May, I don't need to buy that during June. So, if my beginning inventory in June was $20 million, I subtract that, means I only need to purchase $40 million worth of goods during the month of June because I need 60, but I already have 20 on hand. That was the ending balance of the prior month. Therefore, my purchasing manager knows I need to purchase 40 million during that month. So this is the barometer or the tool or the guideline that's used to assist the company in knowing what they have to purchase in order to have enough on hand to meet their customers' needs, what they want to sell, and still have enough on hand left over at the end of the month so they have enough to start the following month to meet those customers' needs. And that's what the concept of a cash and a purchases budget is all about. Allowing you to meet your own internal needs, your customers' needs, and to be able to plan for that in advance. Thank you.